Hello everyone, and welcome back. Don't forget to subscribe for the latest Bitcoin news and price predictions. Why the halving event will push Bitcoin price to reach $100,000 in 2024. Bitcoin, still the consensus leader of the pack for the entire crypto market, had an average price of $49,384 in December 2021. This year, over the first few days of the month, the maiden digital coin is changing hands at a median value of $17,030. At the time of this writing, BTC, according to the latest data from CoinGecko, is trading at $17,210, increasing in value by 2.4% over the last 24 hours. The digital asset is now minus 65.9% on its year-to-date performance and has already lost 75% of its all-time high value of $69,044 that was attained in November 10, 2021. Still, even with its significantly lowered value, Bitcoin, according to some analysts and experts, still has the capability to surge all the way up to the $100,000 territory. Bitcoin at $100,000, in 2023 or 2024. In October 2022, Tone Vays, a crypto analyst and derivatives trader, said the cryptocurrency market along with stock market will experience a bullish run in 2023 as capital flows out of Europe and into the United States. By the way, if you want to support, please support by liking the video and subscribing to our channel. In one of his interviews, Vays said, "I would be surprised if we're not approaching that $100,000 Bitcoin price sometime next year. I think that there will be a lot of speculative money flowing into the equities market and into crypto markets." The trader has also suggested that more investors might end up purchasing BTC as FOMO, fear of missing out, sets in and they, investors, wouldn't want to miss out buying the crypto asset under $10,000. Meanwhile, other experts believe Bitcoin will reach $100,000 in March 2024 as the date is proximate to the much-anticipated halving event that is supposed to happen in spring of that year. Historically, the cryptocurrency experiences massive price increase during its halving episodes, increasing its value by 1,263% between the 2016 and 2020 occurrences of this important event. With the trend, it is projected that by March 23, 2024, a single unit of BTC will have a value of $120,263. What is halving? Halving refers to the process at which the block reward given for Bitcoin miners are cut in half after 210,000 blocks, roughly every 4 years. As the event halves the rate of production of new units of the asset to be released for circulation, it serves as a means for the blockchain to introduce artificial price inflation until the time comes that all Bitcoins are already released. This system is expected to run until the proposed limit for the digital coin, which stands at 21 million, is reached by the year 2140. Democrats introduce a bill targeting Bitcoin mining. A bill filed by Senators Ed Markey, Democrat from Massachusetts, Jeff Merkley, Democrat from Oregon, and Jared Huffman, Democrat from California, would mandate an interagency investigation on the effects of mining crypto assets on the environment and energy use. According to Markey's news release about the Crypto Asset Environmental Transparency Act, it would be overseen by the U.S. Environmental Protection Agency. Additionally, the EPA would examine the country's crypto mining activity, and businesses would have to report their greenhouse gas emissions. According to the press release, operations that use more than 5 megawatts of power would be forced to submit their GHG emissions to the government. Senator Markey claimed on Thursday that large cryptocurrency mining companies are adversely affecting decades of progress in the fight against climate change by prioritizing profits over the promise of a clean energy future, endangering the dependability and safety of our grid and increasing the likelihood that utilities will raise energy prices for working families. Flare gas and landfill gas, waste gas that is released in air during natural gas mining, are known to be used for Bitcoin mining activities. U.S. Senator Merkley underlined that the majority of the electricity used in crypto asset mining comes from burning fossil fuels in a press release that was released on Thursday. However, numerous studies conducted over the years show that the vast majority of Bitcoin mining companies use renewable energy. The Environmental Working Group, Sierra Club, Earth Justice, and Seneca Lake Guardian all support the Bureaucrats Act. The Environmental Working Group's Scott Faber, Senior Vice President for Government Affairs, claimed in a statement that digital assets that depend on proof of work are wasteful by design. The snapshot of the total reserves and liabilities was taken on the 22nd of November 2022 at 23 hours 59 minutes and 59 seconds Coordinated Universal Time. In a post-assessment statement, Mazars declared, "At the time of assessment, Mazars observed Binance controlled in-scope assets in excess of 100% of their total platform liabilities." Mazars calculated and verified Binance assets through a Merkle proof. After carrying out the assessment, Mazars discovered that Binance had a collateralization ratio of 101% in its Bitcoin reserves. However, Mazars' report clarified that Customize Bitcoin is collateralized on the Binance blockchain and the cryptocurrency exchange currently controls it. The assessment included all the margins and loans of the in-scope assets spent as out-of-scope assets. Binance's assessment was triggered by the collapse of FTX, one of Binance's top competitors, due to liquidity crises. Last month, the cryptocurrency exchange announced the launch of its Proof of Reserves system in order to provide more transparency of users' funds. In the same announcement, Binance mentioned that the Proof of Reserves system would begin with BTC and add other cryptocurrencies later. Post-analysis drama. Mazars' report on Binance Bitcoin reserves not true. Francine McKenna, a lecturer in financial accounting at the Wharton School at the University of Pennsylvania, has declared that Mazars' assessment is not an official audit. She said, "They did a comparison of balances per public key address from a list they got from management. They did not compare any balances in independent banks or custodians or depositories. This is more worthless than even the Tether or USDC report." In September, the U.S. Securities and Exchange Commission accused Friedman LLP of serial violations of the federal securities laws and improper professional conduct. According to the SEC investigation, the New York-based accounting firm carried out audits on two publicly traded companies, iFresh, a Chinese grocery store, and another undisclosed company. The auditors were charged a fine of $1 million. Friedman LLP was the auditor of Tether from May 2017 to January 2018. In August, Tether replaced Friedman LLP with BDO Italia. The collateralization analysis performed by Mazars covered Binance's total reserves and liabilities. These Customize assets specifically included Customize spots, options, margins, futures, funding, loan, and earn accounts. Thanks for watching. See you next video.